So the big question with these non-banks for the future is whether they're going to be able to make enough money to survive, whether they're going to be able to make enough revenue to survive in a climate that also has all these other players. Where are we now? What does the world of UK retail banking look like now? If you remember, previously we had a few really big banks with big brands. We had quite a few smaller banks with less well-known brands, but they were still on the high street very predominantly, and they were still very physical. What do we have today? What have we got to? Okay, so we do still have the big banks. They still exist. They haven't gone anywhere. You'll still see NatWest. You'll still see Barclays on the high street. And they have a few things going for them. They have, these well-known brands. They have lots of customers. There are still a lot of people who haven't found the energy, the time, or a reason to move away from these big banks. But one thing they don't have going for them, when we go back to the previous drivers, is technology. They still have pretty what we call legacy systems, and these are systems that they've had for way too long. And they mean that whilst they've got, big brands and lots of customers, their future is a little bit uncertain, right? They're not going to go anywhere immediately, but until they start to solve this problem with the legacy systems, they are really, really going to struggle in the retail banking world of the future, because those legacy systems will hold them back. Not only will we have outages, which upset everybody, but they also won't be able to build the services and the products that customers increasingly want, because, as I said, Apple and Google have done a number on all of our expectations, and we really want these digital, connected, intelligent services. So whilst the big banks still exist, their future is a little bit uncertain right now. Then we have what I like to call the challenger banks. Now, this term is really controversial. You have so many different meanings of this, but my meaning of this is some of those smaller banks I talked about earlier. So maybe Santander would count in this brand, TSB would count in this band, if you like. And these banks have, they still have the brands. I think you could wander down the high street and find most people would know or recognise TSB and Santander and be able to tell you that they were a bank. They might not tell you exactly what they do or where they are or, the history or anything of that. But they do still have the brand. So they're recognisable. They have fewer customers, largely because, in TSB's case, it didn't exist until recently. Lloyds had to split TSB out of its group as part of a sort of another regulatory instruction. It did ship some of its customers across. They've gone over to TSB, but they do have fewer customers for now. And they also, unfortunately, by and large, have that same legacy system problem. Now, I won't go into it too much today, but TSB was very aware of its legacy system, and it was aware of the problems that might cause it if it wanted to compete in, the 2020 banking market. So it thought, right, fine, understand the problem. We're going to change that. We're going to go and get a new one. We're going to get a new system, a whole new system, everything. We're going to make it all shiny and new. Unfortunately, it didn't go very well for them for a number of reasons. But when they tried to turn that new system on, it just caused huge problems. And by problems, I mean customers couldn't access their money, payments were going missing, services were down. Essentially, the bank just wasn't functioning. And that, not only was problematic for its customers and for the bank itself, because its reputation is getting damaged, it's not making any money, but also various regulators went, we need to look at that. How did that happen? Why did that happen? Now, you can imagine that, as I said, most of these challenger banks are in the same place. That happens to TSB. They're going, I don't think we want to do that. That sounds like a terrible idea. So that means that these are in the same sort of vertical, if you like, as the big banks. They have some of the similar problems, fewer of the strengths. And I think that means as we go forwards, we're going to see the disappearance of some of these, the merger and acquisition of some of these. So again, more brands might disappear, might be bought by big banks, perhaps from overseas. But they're really not going to survive in the current market when they're up against the big banks and what I'm going to call today the digital banks. Now, again, this is possibly where it gets controversial because some people say digital banks and challenger banks are the same thing. Some digital banks are challenger banks, but I'm going to do it this way for today, so bear with me. Now, your digital banks, I mentioned them already. That's your Monzos, that's your Starlings. They have licenses, so they are just as safe. Oh, am I in America or the UK? Let's go with both, and then you can just change the spelling depending on where you are. They have licenses, so they are just as safe, if you like, as far as the regulator is concerned, as the big banks. Your money is insured with them up to £85,000. So if something does go wrong, you will get that much money back. They don't have legacy systems. They have really shiny new systems. As I mentioned earlier, they've taken advantage of all that technology. They've built those systems from the ground up. Sometimes they've relied on partners until they got there, but generally speaking, they've built those systems from the ground up. They belong to them, they own them, and they are built with the modern world in mind. They are built with the modern customer in mind, who wants things always on, anytime they want it, any place they want it. They want customer service, to be done through chat rather than on the phone. That's a huge advantage for them right now. It also means that they are what we call agile. They can do things very, very quickly. If everybody suddenly decides that, I don't know, they want purple banks rather than green banks or blue banks, these guys can do it in weeks. They can do changes in days. These guys, we're talking months to make any changes to their systems. So this huge advantage they have is these shiny new systems means that they can keep on top of what their customers want, and they can change very quickly in accordance to those customers' needs, desires, preferences. The third thing that they do have going for them right now is that they don't have branches. So they are, as I said, digital. And that means they're not paying for branches. They're not paying rent, they're not paying water, they're not paying electric, they're not paying staff to sit in those branches. So they have much, much lower running costs than these guys over here. Now, all of those things are huge advantages in the current retail banking space, and they are doing well. Monzo has 4 million customers. It was currently rated the top of a very widely respected customer poll regarding their customer services. So not only have they got a lot of customers, but those customers are happy with them. But I would say they probably don't have quite enough customers yet to feel safe. The other thing is, and certainly not when compared to the big banks, the other thing is that their products that they offer are slightly more limited. So whilst these big banks over here can offer you everything from a mortgage to insurance, they can offer you a current account, a savings account, a credit card, a bank loan, the products and services that the digital banks offer are more limited for now because they haven't got there yet. They're quite new, and doing anything new in financial services is going to take a little bit of time because you can't just launch it and if it goes wrong, take it away again where people's monies are concerned. You can do that with kind of a new colour branding, you can do that with a new customer service channel, but you can't really do it when it comes to kind of lending people money or, indeed holding their money. So I think the future's bright for the digital players. I think the big players in the UK are going to do well. I think they're going to solve this problem of limited products relatively quickly. I think there may be some smaller players who will struggle. In fact, we've already seen one exit the market, a bank called N26, which is actually a German bank. But again, it had all these advantages going for it, came to the UK, for various reasons didn't do particularly well. Then there's the political and economic climate, and it decided, no, thank you, we're going to withdraw from the UK market. And I think we might see a couple of others in this space either close down, they might be acquired over here, which would be really interesting, or they might just decide to focus somewhere else. And then the final group I just want to mention quickly are the non-banks. Now, these are banks that look like banks but aren't banks. So bear with me. They don't have a banking license. They have a different sort of license typically called an e-money license. Now, a bank that might fall in this group is something called like Revolut, for example, would fall in here. So what they do have, if we take Revolut as an example, is lots of customers. And a lot of those customers, to be honest with you, don't really care that they're not a proper bank. Whether they should care or not is a very different question. But what these non-banks provide are very similar services to these three. They give you an account that you can put your money into. They give you a card, a plastic card that enables you to spend your money. They give you virtual cards that enable you to spend online. They do tend to offer more products. Revolut, again, as an example, offers a very wide range of FX and travel money products, cryptocurrency products. So they do have more products. But as I said, they don't have this big bank license. Now, where that could be hugely problematic for them is when they come to making money. So most of these banks in the UK do not charge you to have an account, do not charge you for the basic banking services. And that's just because that's the way it's been in this country for quite a long time now. There are also various regulations that require access to basic bank accounts. But they can make money through that fractional reserve, through that interest income, that fractional reserve banking system we talked earlier. So once they've got the customers and the deposits, they start lending the money out. Well, hey, they're making money. They're making some revenue. Not necessarily enough revenue to survive alone, but they've got some money coming through the doors. These guys can't do that. They don't have this license, which allows them to hold and lend money. They have a license that allows them to move money, but they can't hold it and they can't lend it. So the big question with these non-banks for the future is whether they're going to be able to make enough money to survive, whether they're going to be able to make enough revenue to survive in a climate that also has all these other players. And again, I think this space will be probably quite similar to this space. We will see quite a few drop off. In fact, I think we'll be seeing more closures, mergers and acquisitions in the non-bank space as the market just becomes too crowded. There are too many services out there and they just realize that they just cannot make enough money to survive. So that's where we are now. That's a short summary of my predictions. Let's see how right I am in a few years' time.